Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So if you haven't heard, today's the day. Tesla stock enters the S&P 500 in the single biggest stock market transaction in history. 2020 has been a relatively interesting year for Tesla stock to say the least. Finally, after a period of 4 to 5 years of doing basically nothing from 2014 till 2019, Tesla stock finally woke up and headed towards the moon and is now on its way to Mars. Some were surprised by this movement in Tesla stock, others not so much, including Kathy Wood and myself. Now, I'm not here to toot my own horn, but I mean, you can go back and watch my videos from a year ago and see what I was saying about Tesla stock. It has happened. I called it. Now, I'm not a genius here. This stuff was relatively obvious. The problem was there was so much FUD out in the mainstream finance media amongst retail investors and some really dopey analysts that many people's judgment was clouded about this company and therefore they were too scared to touch the stock. The narrative is flipped. Practically everyone understands this company now at a reasonable level. Now sure, there's still a lot of learning and understanding to do, but the point is the market gets it. Tesla is going to be a dominant player in EVs in the future, at the very least. Some people also believe Tesla will supply batteries to other automakers, and of course, many people now start to recognize the potential of software revenue and Tesla's future robo-taxi network. With Tesla having posted 5 consecutive quarterly profits, and even the daftest of numbnuts able to understand now that these profits will continue into the future, irrespective of what Gordon Genius Johnson may tell you, today we witness the beginning of the next chapter in Tesla stock's story. So, in this video, I'm going to share some thoughts and insights around the imminent S&P 500 inclusion, what may happen with the stock price, some of the potential fallout subsequent to S&P 500 inclusion, and more. So, let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. If you haven't seen my warning about Tesla's stock and S&P 500 inclusion video, check out the card in the corner. It's really important that you guys understand. The too long didn't watch on that is quite simple. Nobody knows what will happen to Tesla stock. The only thing I can be certain of is there's going to be incredibly high volumes in terms of buying and selling of Tesla stock today. Rob Maurer over at Tesla Daily also posted a fantastically informative video yesterday discussing what's likely to happen in terms of Tesla's inclusion in the S&P 500. The too long didn't watch on that. Essentially, the vast majority of buying is likely to happen at market close at the closing price. Overnight, we heard this news from S&P Global Ratings. Tesla ratings raised to BB on mounting liquidity. Outlook positive. On December 9, Tesla completed the sale of $5 billion of common stock through its at-the-market offering program. The company raised about $7.3 billion cash in 2 previous share sales this year. We expect cash on the balance sheet to exceed $19 billion at the end of 2020. As a result, Tesla's net debt is essentially zero. Based on a key credit metric, debt to EBITDA, our assessment of financial risk has reduced substantially. With more cash on its balance sheet than debt, the company appears easily able to fund its global expansion in China and Europe and broaden its US manufacturing base by opening a facility in Austin, Texas. Nevertheless, we are risk adjusting our assessment to incorporate significant future uncertainties, including a slower than expected rate of EV adoption. Now, I have to jump in here. This is going to be embarrassing because guess what's going to happen? It's going to happen faster than everyone's expecting, not slower. Oh man, everyone is so asleep on this. But anyway, let's move on. And the coming fierce contest with a number of very capable global auto manufacturers. Who, being a very capable global auto manufacturer of internal combustion engine vehicles, does not automatically translate to being a very capable automotive manufacturer of electric vehicles. They're chalk and cheese, completely different technology. An internal combustion engineer is not automatically an expert on batteries, nor are they an expert on software, which kind of matters. So, thus far, they're concerned potentially about uncertainty as to whether or not EV adoption will happen as fast as expected. It's going to be way faster. There's also some concern about potential competition. There isn't any competition. Let's continue. We remain somewhat cautious about whether enough consumers, especially in the US, will switch from internal combustion engine and hybrid vehicles to EVs given limited financial incentives and a relatively benign gas price environment. Once again, this is not a concern. Tesla continues to drive their prices down off a far greater value, and consumers who actually run the numbers will realize the total cost of ownership of electric vehicles is far less than a gas-powered vehicle over its lifetime, because the cost of electricity and maintenance is a fraction of what it is in an internal combustion engine vehicle. Anyway, the point I'm making here is Tesla's S&P 500 inclusion, combined with the S&P upgrade to Tesla's credit, is combining to form the final stamp of approval for some of those remaining Tesla skeptics. What a difference a year makes. 12 months or so ago, you have a Tesla bull in the mainstream finance media getting laughed off the set because of their very bullish, ridiculous, absurd view on Tesla. 1 year later, the reverse is now going to be true. Mark my words, once Tesla joins the S&P 500, you will be hard-pressed to find a Tesla bear or short seller that isn't equally laughed off the set moving forward. I know, not a whole lot's changed about the company, most of this stuff was fairly obvious, but the sentiment and the narrative has finally shifted, and there's a lot of old school investors who finally will give Tesla the respect it deserves now that it's joined the S&P 500. And by the way, just a little message to some of the Tesla short sellers. And speaking of morons, I'm going to now quote from Toyota's president yesterday publicly declaring that he intends to lead his company into bankruptcy before this decade is out. I quote, Toyota's leader criticized what he described as excessive hype over electric vehicles and the costs of an EV transition. The infrastructure needed to support a fleet consisting entirely of EVs would cost Japan between $135 billion and $358 billion. When politicians are out there saying, let's get rid of all cars using gasoline, do they understand this? The current business model of the car industry is going to collapse. Allow me to translate. Hi, I'm the captain of the Titanic. I've just noticed there's a gigantic fucking iceberg in our way, but it's going to be very expensive and difficult and scary to try to avoid this iceberg, so I'd rather continue on the same course and kill every single one of you. Rip this company. This is nothing short of catastrophic idiocy, a complete lack of vision and embarrassing leadership. I mean, time will tell. What else can I say? And now for some closing thoughts around Tesla stock's imminent inclusion in the S&P 500. This is a historic event and a great learning opportunity for anybody who's interested in the stock market. This is the single largest transaction in the history of the stock market. Nobody knows what's going to happen, but I can guarantee one thing. It will not be boring. As I've said in previous videos, I have absolutely no idea what will happen to Tesla's stock price. My suspicion is that it's going to give away some of its gains post S&P 500 inclusion, maybe 5%, 10%, 20%, but I literally have no idea. I mean, it could just continue onto the moon. Wouldn't complain about that either. The point is, grab your popcorn, grab a notepad, enjoy the show. This is going to be a great once-in-a-lifetime learning experience. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.